Hello everyone, welcome to Yadnya Investment Academy. Today we are going to do a mutual fund review. Let me first explain the methodology of the review. We will list and review the fund on various parameters and rate each parameter by green, yellow or red star. Green star means good performance, yellow star means average performance and red means below average performance. In the end, based on the total number of green, yellow and red star respectively, you can take a call to buy this fund or not. Please remember, all the fund parameters we are going to discuss here are based on 21st March 2017 data as reference, and we only review regular and growth plans of mutual funds. In this video, we are going to review fund name ICICI Pru Long Term Equity, which is a ELSS fund launched in August 1999. Before going into review, let's understand about fund's objectives. The fund invests primarily in equities and equity related instruments and is ideal fund for long-term capital appreciation. It is a popular multi-cap ELSS fund. It enables investors to avail tax deductions from total income as permitted under Section 80C of Income Tax Act. Now let's start the detailed review on each parameter. First, the fund belongs to ICICI Prudential Mutual Fund family, which is currently India's biggest fund house in terms of asset under management out of more than 45 fund houses in India and was established in 1998. So for being a very large and experienced and growth oriented fund house, we give them a green star here. Long-term equity fund was launched in August 1999, which means it is active for more than 17 years. So let's give a green star here too for being an experienced fund which has seen all market ups and downs. Fund is categorized in ELSS category as it gives Section 80C tax deduction for investing and has a 3-year lock-in period. Now moving to next, this fund has a asset under management of 4014 crores and is the 5th biggest ELSS fund in India. This high asset under management shows investors' trust in the fund and its consistent performance. So deserves a green star here too. Now let's talk about the moolah, that is the returns. We will first talk about the trailing returns from 21st March date and then talk about the calendar returns. In trailing returns, we can see the fund has given very good returns. It has consistently beaten its benchmark index, that is Nifty 500, across all 1, 3, 5 and 10 years, and has also beaten the category average returns consistently in long term across period of 5 and 10 years and is almost equal to average in 1 and 3 years. Category average here means all the ELSS funds combined return average. So overall trailing return performance as of today is decently good, especially in long terms. Now looking at the calendarized returns of last 10 years from 2007 to 2016, which means returns from 1st Jan to 31st December of a calendar year. We see that there have been only one instance when the fund was beaten by both benchmark and category average, that is in 2007. So that is the only bad performance year in last 10 years. Rest, if you see, it has performed exceptionally well by beating both benchmark and category, and that too comprehensively in the year 2009, 2010, 2012 and 2013. In the rest of the years as well, it has given near category average returns performance. So looking at this, we see very consistent performance of this fund, except in 2007 it has either performed near the category average or has given stellar returns. So it has easily beaten its benchmark every year except 2007. Due to this very consistent and overall good performance, we give this fund 2 green stars on these parameters. Next important parameter is fund manager. Long-term equity fund has been in hands of new fund manager George Joseph, who starting managing this fund since April 2015. George is a BCom and BA grad with CACS memberships and has been part of the fund house since 2008, so has spent decent enough time with fund house as portfolio analyst and manager, but is new to fund management work. George now also leads one more famous equity fund of ICICI Pru, that is multi-cap fund, since December 2015. As the name suggests, it is an equity multi-cap fund with more than 2000 crore asset under management and is a very old and good performing fund of ICICI Pru. Both long-term equity fund and multi-cap fund has shown no sign of change in return momentum since joining of George, but it is difficult to rate the performance with such short time frame. So looking at fund managers very limited fund management experience but decent recent performances and his experience and stability in the fund house, we will give a yellow star on this parameter. Next parameter is top stock holdings of the fund and understanding the fund's diversification. As on 21st March, fund has 45 stocks in portfolio with top 5 contributing little more than 30%. Current cash allocation is less than 1% and rest all is in equity. Fund has decent diversification in portfolio and weightage of top 5 companies is little higher than our benchmark of 25% and hence we give this parameter a yellow star. Next parameter is sector diversification. Even though fund's top 3 sectors has weightage of more than 50%, but weightage is equally spread among financial, tech and healthcare sectors. So for this spread out sector allocation, we give them a green star here. Next are expenses. Expense ratio is 2.3% of this fund, which is lower than the average expense ratio range of ELSS funds, which is around 2.5%. So this parameter we should give a green star. Now those who like numbers, let's discuss few important ratios too. Standard deviation, a measure of volatility and risk, is almost equivalent to benchmark and category, which means it takes almost similar risk as them. Beta 2 is a measure of risk and is almost same as category and again shows not too much extra risk fund is taking. Alpha, which measures the risk adjusted returns. So 8.4 alpha here means it can perform 8.4% better than the benchmark. So as expected by equivalent risk as category, it also shows similar alpha as category. Last is P ratio of the portfolio, which is 24.8 and is little less than benchmark NSE 500 index of 27.2, which shows little higher risk expectations. So the fund is not too risky, but that also means not too much high return expectations as well. So deserves a yellow star here. Few other important info to note about the fund is that it is a multi-cap fund with 57% in large cap and rest in mid cap and small caps. Also, this table shows how rupees 10,000 SIP would have performed in various time frames and prove the exceptional performance this fund has given continuously. So if we calculate, we got total 7 green stars and 3 yellow stars and no red star, with new fund manager being the biggest concern for this fund. So to summarize, ICICI Pro Long-Term Equity Tax Saving Fund is an average risk fund in the ELSS category. This fund has beaten its benchmark in 13 out of last 15 years. The portfolio of the fund is created around stocks and sectors with cheaper valuation and has given very consistent above average returns in last 10 years, 2007 being an exception. This fund has passed through multiple hands in last few years. CIO Naren Shankaran led it till February 2011. It has again got a new manager named George Joseph in 2015. Despite the changes, the investment strategy largely has stayed the same. Joseph focuses on multi-cap strategy and follows a benchmark agnostic approach for creating the portfolio. These are still early days for him, while Joseph has spent good time in fund house before getting fund management charge and his entry has not changed much in overall strategy and returns. Still, we will be cautious and would want to give some more time to him to prove himself. So that is all on this fund review. If you have any question, please do write in the comment section below. Have a great time ahead.